I started with was very small at the beginning. Now it's more than 1 trillion. I am Group Chief Investment Officer for Wealth Management at Emirates NBD, which is Dubai's largest bank. I didn't even know this world existed when I was 18.
Often our parents, what they do, it shapes what we want to do.
My father was, he passed away, unfortunately, a doctor. I also had one grandfather and one grand-grandfather. They were all doctors, but I broke away with this tradition.
But you went a different path.
I always thought the bankers have nice suits. Really, it was my thought process. Can you imagine? Then I came to my very small bank with half the average salary of the average graduate from my school.
Yeah.
So I started as an equity analyst in internet stocks in '98. You can imagine how I initially thought that it was the most easy job that you could imagine.
What are some of the myths that you see in our space of private banking?
This idea that you can successfully trade on the short term and make money consistently by kind of short-term speculation is a myth that I'm fighting every day, including in my bank, including with my own clients. When you do investment decision, you're never 100% certain it doesn't exist. We're not far from the point where intelligence will become a commodity. So what is left? Judgment, trustability, accountability. That's the only thing that gives you value. And in a
Good morning, Maurice. How are you?
I'm very fine, Paul. Thank you for having me.
You know, it's beautiful. Ironically, you're going to be coming to Singapore, and we could have done this here or there. But thanks for coming, because for me, doing this in Dubai, in your home state, it's really important.
Of course, and for me, it's very, very convenient as well. Delighted. Welcome to Dubai.
I appreciate it. Thank you. So, for people that may not know you, and there aren't many, especially in the region here, can you give a little bit of an introduction as to who you are before we turn back the pages of time, we discuss your journey?
Of course. So we'll start with, I am Maurice Gravier. I am Group Chief Investment Officer for Wealth Management at Emirates NBD, which is Dubai's largest bank. And I do that for 9 years now. That's in a word who I am.
Wow. And then, but you know, so let's go back. So you were born and raised in France. Where was it, Paris or?
Oh, it's we go into a very controversial question for many French people.
Do tell me.
I studied in Paris, but I was born in the Alps, which is well, of course, a very, very different region. And I say it's controversial because when you study in Paris, but you're not from Paris, people look at you a bit like, okay, there is a peasant that
really?
Yeah.
Still like that today?
I don't know. I've lost a bit of touch with France. So yes, I was born in the Alps. I spent there the first 18, 20 years of my life. Then I studied in Paris. Then I worked in Paris.
What did you study in Paris?
Business. It was ESCP Europe. It's called now. It was a business school, one of the best ones in France, I must say.
I'm curious, what did your parents do? Because, you know, quite often our parents, what they do, it shapes what we want to do, right? Sometimes not, but what did they do?
Interesting, because I have broken a kind of a family tradition. My father was, he passed away, unfortunately, a doctor. I also had one grandfather and one grand-grandfather. They were all doctors, but I broke away with this tradition. Yeah.
Really? What sort of doctors? General practitioners or?
He was, oh my God, I don't even know how to say that in English.
Say it in French.
Rheumatology, about the bone.
Okay,
you know?
rheumatology, yes.
He was a specialist, and I saw him working night and day. He was a very, let's say, old school doctor, you know, that would work very hard and not make necessarily lots of money because it was not what he was about. So him working so hard, and I told myself, maybe I'll do something else.
It's a labor of love. So when you went to study business, there was no kickback. Your parents were okay with it?
Oh, of course. I was very lucky to have parents that were okay with whatever I wanted to do. And the funny thing in terms of I have kids that are at this age where you ask yourself, what do I want to do? And I understand that you also have kids in this situation.
Yeah.
You take very important decisions when you're young, where you don't really know what you're doing. And in my case, it was just I liked mathematics very much. I didn't like physics, so engineering was out of the equation. But economics and these kind of things, it worked with my love for mathematics. And then there was some test and whatever, and I had the opportunity to go there. It was not really, I didn't tell myself from very young age, I want to do business. Sometimes I meet young people like 14 years old, tell me about Goldman Sachs or whatever. I didn't even know this world existed
Yeah.
when I was 18, but here we are.
Yeah, it is different, and especially nowadays, the kids are a lot more informed.
Yeah.
What's interesting, in the world of private banking, if you look at some of the best minds in structured products, a lot of them are from the French background because of engineering, and a lot from the Indian background. But I find it fascinating that the French in particular have dominated that space. But you went a different path. So after that, how did you get your first entrance into the corporate world?
It was Banque Paribas, which became BNP Paribas, but Paribas was the kind of a prestigious arm of it. And I will be very honest, I was in the second year of business school. I had to choose what I would specialize in the third year. And I told myself, no, I have to make a break to understand what I really like. And I always thought the bankers have nice suits. Really, it was my thought process. Can you imagine?
Yeah.
I was 22 or something.
You don't know, right?
I told myself, I should do an internship there. And I started with Banque Paribas 1 year, and it was it was the very newly created Paribas Asset Management. It was something new in France. This asset management. It was in maybe '94 or something like that, and it was at the edge. It was the absolute best in France. So I started there. In love.
And it was that simple. Yeah. And then after that, what was the next part of your journey?
The next part of my journey, I graduated in '96, and in Europe, and I know Singapore and Dubai are a very different trajectory where everything is always great, but in Europe it was a low part of the cycle. It was tough to find a job even from a top business school. So I had the choice to. There was no job in finance, what I wanted to do. And so I decided to move to a French regional bank, a very small bank, where I started to...
Still in Paris?
No, in the Alps, in my home region.
Okay, you went back.
Yeah, because, nice. And the funny thing is that I could have been one auditor among 200 in Paris. That was the kind of opportunities, the only opportunities there were. But then I came to my very small bank with half the average salary of the average graduate from my school.
Yeah.
But I was the most graduate. They asked me to work on everything. The most interesting thing, there was one small M&A, so I worked on it, and then the corporate activity, some loans, and then a bit of investment.
But don't you think, because it's interesting you said it, because a lot of people are in our business are enamored with big brand names. Yeah. But I always find, and I grew up in small shops, but if you work for a small shop, you get to do everything. Absolutely. It's significant, right?
Absolutely. I did that for 2 or 3 years. After some point, it was about the money and the call from finance, because then the cycle had restarted. But in terms of even in terms of network, I was in my small bank, very good bank by the way. I was talking to the CIOs of mid-sized companies. I was learning so many things, and the bankers there were very, very good doing things what was good for the client, for the region, for the communities. And I agree with you. The small shops are beautiful.
Did you become a portfolio manager?
No, not really. I was working in the corporate department, and I was the guy doing anything that looked a bit complicated. That's what I was doing. So there was a few M&A back in the days, and there was also the beginning of investment products, but mostly for running the treasury of the corporates. And I got involved in that. It was a regional bank with part of a group, and in Paris there was a trading desk and this kind of thing. So I became the kind of interface between our corporate clients, who are like, a ski resort, for example. And these guys, they have very seasonal treasury, of course, and sometimes they end the season and they have, 50 million of euro or whatever for 8 months. And then I told them, look, can do something with that, and I liaised with the other. It was.
I love it. You know what I find interesting in private banking? I've met obviously many RMs over the years, and not that many of them really. When I speak to them, they don't seem so interested and knowledgeable about the holding company. So, for example, if I was a private banker and the person owned a ship, I'd want to go on the ships. I would want to see the heart of the business, because it's visceral. It's where the DNA of the company and the family is from. But because most people just see numbers on a balance sheet, but they don't see what's behind it. That's which I find very interesting.
That's very true, and it's part of the DNA. I couldn't have said it any better. And frankly, in this part of the world as well, you can really feel that Yes, we have millionaire migration. We have all these people coming from abroad just because they have money from elsewhere. But here, the entrepreneurial scene, I guess it's the same in Singapore, but that's entire families. They know where they come from. They know where their family was just 3 generations ago. And they've built empires and they love the business. And it's the DNA of the family. And they would never do something wrong because their brand is their name. And I love that, yeah.
How do you find the cultural difference? Because having worked in Paris, Geneva, and Dubai, your career seen different things. Just share with the audience how different, your working environment is just purely based on location. Do you find that the values, the ethics, the drive, each location is different?
Yes, it is. The point is that to some extent, part of it is probably the, let's say, national culture, and part of it can be the specific corporate culture you're in. And so, yeah, I spent 15 years in Paris, mostly in asset management. That was really portfolio-oriented, much more than client-oriented or whatever. I've done investment all my life. I was and in France, you have a combination of let's say you need the technical skills, but you also need the kind of political skills a bit more. And you have a culture of, if you're the first one to leave the office, that's a problem for your career. That's the kind of thing. Even in a very dynamic environment, it was a fantastic company, but you feel that. While in Switzerland, typically, you do your work well, nobody will ask you anything. And it's also...
and Geneva, as you said, it's like a village, right, in comparison?
Oh my God, yes. We all know each other, and people stay very long. I stayed 8 years with Lombardier, incredible bank. Some people are there for 40 years,
forever.
Literally. And when they move, they spend another 20 years in another bank next door in Geneva. And in France, there is something a bit particular, is that for the hiring process, let's say bluntly, in France, it's very difficult to get rid of someone. So people are very conservative when it comes to hiring. You have no room for mistake because to get rid of someone, it's it's difficult, it's costly, it's whatever. And so you also have sometimes situations where people a bit play like that. They don't work that much, and organizations are a bit. You have a different relation. While in Geneva or in Dubai or I guess in Singapore, if you're not anymore,
you
it's
might
over.
be pushed out.
That's how it is. And, but the good news is that the job market is very...
It's buoyant, right?
Yeah, it's buoyant.
But
you have no issue hiring someone and trying.
That's true. I do find, what I've noticed, I'm not asking you to comment on this, but I've noticed that there's a lot of mediocrity in parts of banking. What I've realized, a lot of hiring managers, like I'll give an example. If I put a 9 out of 10 candidate that is coming from a left field space, for example, asset management moving into private banking, or for investment banking into private banking, the guy's 9 out of 10, or the girl. And then you have a private banking candidate, so 7 out of 10. 9 times out of 10, the 7 out of 10 is going to get hired because the hiring manager is worried, well, what happens if the person doesn't assimilate well, or if they leave, and they don't want to be held accountable. Because if they hire someone left field and it doesn't work out, they're going to get shot. You hire a 7 out of 10, and I just think sometimes no, because I always feel if someone is moving purely for financial reasons and it's the same, it's going to be short-lived. I think if there's room to maneuver, go up, do something different, that's what makes it long-lasting and more fun.
You know better than me. You are an amazing labor market expert for 20 years. And from my own experience, I've changed companies like 4 times in my life. But I have seen that. And interestingly, I'm sure you've seen that as well. You see people leaving a company and coming back.
Yes.
And that's something that, by the way, that's something that I like to see. And sometimes it
is interesting.
Like they take a big upside in terms of compensation or whatever, but they feel like, oh no, I don't belong.
They used to joke about that at Credit Suisse. They would say, if you are a director and you're stuck, you want to get to MD, you leave, you get another job, you come back as MD. Which is ludicrous. And then talk about the next part of your journey beyond. So what took you to Geneva with Lombard?
So I spent 15 years in asset management, where I started reshuffling the product offering. It was kind of a marketing thing. And by the way, I found this job because of the networking from my small regional bank, because it was the same group. And that's funny because the the CEO of my small regional bank recommended me, and that's funny because again I came from the Alps with my peasant suit, going back to asset management, which is another way to say that you're right. You can start in small shops.
Yeah.
Spent 15 years there. I started a bit in marketing, then I moved very quickly to investment management equity. Because what else? I mean, that's the most fascinating asset class.
By the way, sorry to interrupt you. When
Please.
I meet someone, typically you can tell when they start talking which asset class they come from. Have you noticed that? Not always, but often. But often.
I will be careful because now I take care of all the asset classes, and in my team I have. But I agree.
But your DNA is equities, right?
It is, of course,
That's
because
very
you invest
clear.
in human activity. You
Yeah.
invest in growth, in business, and I'm not saying that bonds are terrible, but it's different thing. In best case, you get your money back and your coupon. So that's how it is. Anyway, so I started as an equity analyst in internet stocks in '98. You can imagine how I initially thought that it was the most easy job that you could imagine, and then I learned what happens to equity analyst and portfolio manager. Then I was lucky enough to be very highly ranked in the ratings and whatever. So what happens in this kind of companies, the best portfolio manager becomes the head of the team.
Yes.
Until you reach the point where you don't have enough time to be a good portfolio manager anymore, and you are not the kind of people who is good at leading a team, which is exactly what happened to me. So over 15 years, I became equity CIO at the end. It was a large firm, Natixis Asset Management. That's changed name now, but and I was head of equity, and I had reached a point where I couldn't really decide between being an apparatchik and a portfolio manager. I told myself, okay, it's time for a reset.
Okay.
And this reset came from Switzerland. And the reason, it was pretty much when Switzerland lost the bank secrecy. So I'm not saying that they were not running portfolios correctly before, not saying that, but allegedly it's possible in some banks, but they wanted to hire some people from the institutional world to run the portfolio. It was not about being advisor or RM or whatever. It was really to strengthen the process. So it was a fascinating time because I joined a bank that was 200 years old or pretty much, with quite successful. But with this idea, okay, we need help. It was initially for equity and equity asset allocation. We need help. Do your thing. And with this Swiss idea where they think you can do it, they hire you, and they know that if it doesn't work, they will fire you and find somebody else, so they take risk. And I stayed there 8 years. Yeah.
And you got to, well, in that setup, the thing is, you got to stay relative. You got to deliver.
Yeah,
you know what I mean?
Of course.
Which I think, what makes absolute sense. Now, when I look at CIOs, I think they vary from bank to bank and CEO to CEO. And I find that sometimes you have CIOs that are talking heads. You have CIOs that run portfolio management teams. Then you have some CIOs that run whole ecosystems, right? It could be DPM, funds. When you, on road to becoming a CIO, did you have in mind what type of CIO you wanted to be?
Oh my God. For me, the real thing, I have a very simple view. I see investment management, it's all about the best possible outcome for the client, which means for me, portfolio management, it starts with we often say philosophy, which is a big word for that, but let's say what you can and what you can't do, a kind of ethics of saying, we are not pursuing a triple-digit return every year, taking maximum risk. You start by what you do, what you can identify, where you can add value, then it's about the investment process. And I think it's a commonality between all the CIOs. You're in charge of the process. Then I love taking decisions. That's who I am. And at the end of the day, I'm very oriented. You said a CIO has to deliver, and for me, what is absolutely quintessential to what we do is accountability.
You are on the Quinntessential Questions Podcast, Maurice, so it's very poignant.
But it's an ambitious word for a French person who doesn't really speak English. So no, it's about being transparent, accountable. We are wrong, in investment. Depending on the time horizon, if you're right 60% of the time, you're very good. It means you're wrong 40% of the time, and people will ask you, rightly so, to be accountable for this 40% at the worst possible timing. That's how it is. So you have to be very transparent, and I work on that. And then you have different culture. When I was at Lombardier, my role was really to make sure that portfolios were perfect. It was the thing, and my clients were the RM and advisors and portfolio managers, DPM. We were doing centralized DPM as well. And then in Dubai, I know that my bank values very much the spokesperson aspect because, and it's natural because in Dubai, you don't have 200 years of history. You're not
Yeah.
a Wall Street legend. You have to prove yourself. So
You become the face of the organization, right?
yeah, and but for me, I will never be the face of the organization without also showing this accountability and transparency, because I think you build a track record. So we're currently, I talk a lot, I know. We're currently doing our global investment outlook. We do that for 8 years now.
And you're coming to Singapore next week, right?
We do, on 26, yes. And I always start the outlook by saying, okay, this is what we said last year and this is what happened. Some years are easier than others, but if we've been wrong, I embrace it. I say, yeah, we were wrong on that and that, and it cost you that, but because of portfolio construction and where we were right elsewhere, maybe it's okay, maybe it's not. And that's how you build your reputation, I think.
No, I wanted to ask you, is when I was talking to some friends about this yesterday, I was just saying that the school system is so broken in many ways because children, us included, we're not taught things that in terms of real value of what you do on a daily basis. So for example, you get a car, you need to get car insurance. These are stocks, these are shares. If you could go into a high school and add a few components in terms of, real awareness about investments, what would that program look like? How would you, create a chapter for the schools? Because I think it would make so much sense.
I couldn't agree more with you. And each time I can help on financial literacy or whatever, I do. I agree with you. The time we spend more time learning to drive, that learning to run money. And wealth is time, actually. It's not the opposite, and I think I would start with that, saying, okay, your future, your wealth today is your future freedom, because that's, I think, the right angle. But interestingly, I think that the younger generations, they didn't learn it at school, but you see many of them saying, I want to be an entrepreneur, or some saying, you have 25 years old, I'll tell you, I want to build passive income. That's something that for my generation, it just didn't exist yet.
It wasn't even a consideration, right?
But I would definitely go to school and learn them the basics of you can simplify and it works. And the beauty of the current times is that you have access to everything. Even with small amounts, you can build a very robust portfolio. And I will tell them, okay, there are 4 fundamental asset classes, not more. I won't go into details. I mean, cash, gold, equity, fixed income, and this is how they behave in different cycles. And over time, it's the magic of, like Einstein was saying, compounded returns is the most phenomenal force in the universe.
Yeah. One of the things that I admire most about you is your energy. I talk about, as a career coach and as a business owner, for me, energy is something that is, just people don't think about it, they don't talk about it. So the first time we spoke, I could tell we were going to become friends. And I said to you on the phone then, and I said to you just now, your energy is radiant. No, because I always feel that if people are genuine, they become magnetic and they create positivity around them. And in your role, I'm just curious, well, are you an introvert or an extrovert? Because I'm sure at home, things are a little bit, because you have to be on in our job, you have to be on all the time, right? But at home, are you very quiet or?
It's a fabulous question. I have no certainty. I don't know how to answer that because
So I'll give you an example.
Well, first, thank you for your very kind words. No, please.
No. So a good definition of an introvert is if you spend time with people, even if you enjoy it, it naturally drains your resources. But if you're an extrovert, you become more buoyant with that spending time. So I am actually an introvert, and in the evening, maybe because of our job, I spend so much time. See, you frown like there's no way you are. But I meet 6, 7, 8, 9, 10 people a day. It drains me, and as much as I enjoy it, and then in the evening I have to die. I'm very quiet.
I would say, at the light of your example, I would say I am an introvert with an ego, which is a bit weird.
Well, at least you admitted it.
Yeah, 100%. But I cannot be bored alone. That's something I'm blessed for that. I can be alone with nothing to do. I will always be very happy. And sometimes small talk, social interaction, it's a bit draining for me. But I have an ego. Very proud of that, but I love shining on stage and being here and share my conviction and see that people are engaging. That's also something that I love. I think I'm probably an introvert.
Is it something that you've done training for in terms of media training and speaking, or is it something you've always leaned towards?
I've done a bit of training, but I think experience. You have to take risks. You have to walk on this bloody stage and take
your
it
daily sound bites when you're in your office. I watched one the other week. It was on a Sunday, and you came in, and you got the screens behind you. But that, to me, it's very real. I feel like I'm with you. I'm plugged in with what you're doing. What you know, it becomes far more real. And then tell us a little bit about your podcast experience, because you guys have a phenomenally successful podcast. What does that look like from behind the scenes from you guys? I want to learn from your experience.
There is a bank podcast, and I don't know if you're talking about my small videos on LinkedIn, because that's
both of them.
Yeah.
I like both the bank one, but also I personally love your ones because I feel I can relate to them.
The bank one is, there are some investments behind, so it's always very, very beautiful. And I like them. And we're moving a bit towards this financial literacy, which is something that I really like. And we are lucky to being Emirates NBD in Dubai is. People have an emotional link to their bank, because everywhere we look at, there's not one building that hasn't been financed by Emirates NBD, and we have I don't know, 40% market share with retail, and we are the bank of people here, so they listen to us. And for my small videos, it just started that I told myself I had a small following on LinkedIn, and people were sometimes asking me questions, and I told myself, okay, I should do a kind of a weekly recap, and let's see how it goes. And I had an office. I was very blessed, the kind of a corporate benefits that you have sometimes. I had a beautiful corner office with a view that was killing on Dubai.
Amazing.
It was beautiful. So I said, okay, I'll put the camera, I'll put the view, maybe people will come for the view. And then it started with... Again, it's all about practice for public speaking as well. I mean, you can train, but at the end of the day, you have to go. My first videos are probably not that great. I had 500 views, and then 1,000, 2,000, and now it's usually 10,000, and a few of them did 500,000 on LinkedIn. I mean, I don't even know why.
It feels preposterous at the time. No, but it's beautiful. Let's talk a little bit about Dubai, because when you look at Dubai now, there's a corridor between Dubai and India and the UK and Europe and Asia. It's such a central place to be. What brought you to Dubai?
It was, first, my first expatriation was 500 kilometers, Paris, Geneva. So it's not really the big adventure. I always thought, after having been in Geneva, I thought, okay, I want to go somewhere. And I discovered Dubai by pure chance one day. I don't know if I should tell the story, but I was going on holiday in the Indian Ocean from Paris. I was too tall for the business class, for the economy class, but too poor for the business class. So I decided to make a stop in Dubai. As simple as that. And Dubai was very smart, still is. And they said, okay, if you pay one hotel night in Dubai, we'll pay you the second one, or something like that. So I said, okay, let's make a 3-day stop. Yeah. And I fell in love. It was in the early 2000s, and the people were. Everybody had optimism, in Europe back in the days, we were just post 9/11 and everything. Yeah, the morale was low, and here I see people that were saying, hey, we are building, and I told myself, I have to come and work one day here. And then from Geneva, I was looking at opportunities, and I don't know if it's the same in Singapore, I'd love to know, but back in the days, it was difficult to come from the outside to Dubai, difficult to find opportunities, really. I found one in a family office, I came, and once I was there, I had dozens of calls from headhunters saying, hey, you're there. And I was like, come on, why didn't you reach out when I was in Geneva? And,
but I find Dubai is a very interesting place, and just the region in general, because I tell you, when we really saw the difference, it was during COVID.
Oh yes,
that's when you really saw that the Dubai and the Middle East put their foot down on the pedal and let's go, let's not hold back. And it's interesting because my wife said to me, would you move to Dubai? And I said, yeah, of course I would love to consider it, but she said, if you can make a lot of money, then maybe we'll consider it. But she's a Singaporean girl. She doesn't want to move nilly-willy. But the great thing about being in business is you can travel, right? And talking of which, when I travel for business, I always try to sneak in some fun. So this morning I went out on a boat ride, a speedboat. It was beautiful, and you get to see Dubai from the ocean. What do you do for fun outside of the office?
So maybe I wanted to reply to the first part of your question, and then I will go to the second. There are many similarities between Singapore and Dubai and the UAE in general. But frankly, I think the most important one is outstanding country leadership. I mean, it's as simple as that. It's not about the resources. Well, in the case of Singapore, they were known. In the UAE, yes, Abu Dhabi has lots of gas. Dubai has no energy anymore. It's all about leadership that not only brings the country up, but also shapes the values of the people. And here it's about a mix of work and fun. This is the transition to the second part of your question. I'm very glad that you took this boat tour, and next time you come, I would love to advise you. The nature is totally underrated here.
Really?
People know the desert, and even you usually take a tour, so you go into closer part of the desert, Al Qudrah, this kind of thing, which is beautiful. But we have Liwa Desert in Abu Dhabi, 3-4 hours drive, and then you drive in the desert, which is the most beautiful in the world. And the dunes are amazing. 100 meters, and you go to the point where you have not one artificial noise, not one bit of artificial light. Yeah. And you camp, you look at all the stars, and you can, you will hear yourself 200 meters away. That's stunning. And the mountains in the north are also totally underrated. It's like the moon, except that it goes like 2,000 meters, and then it goes straight to the ocean.
And places like Oman, you know, have you been to Musandan? Have you done the fjords?
Of course.
Stunning.
Really? The Musandan is totally underrated. You could shoot any sci-fi movie there, and all these mountains, Hassa, Haima, Musandan, which is the Omani part of the extreme north. Stunning. The wadis, which are stunning.
Yeah, no, it's stunning. Talk a little bit about capital flows and what you're seeing in the marketplace, because I know you're always keeping a very keen eye daily on what's going on. What's your take? Because we're living in very interesting times, right?
Oh my God! If we talk about global markets, it's fascinating time. But by the way, it's a fascinating time to be alive, and we are lucky, especially people. We are kind of the same generation where we started in an analog world, and we are now going into an AI-driven transformation with geopolitics that have totally shifted in our lifetime, and will continue to do so. So. Capital flows. If it's about investment strategy, it's one thing. Capital flows in the UAE, we have inflows of billionaires. There's no doubt. We also have a very vibrant economy by itself. So we're talking 5% real GDP growth, similar to Singapore, by the way. The non-oil is booming. I mean, services, construction, of course, this kind of thing. So we have both inflows and this internal dynamics. And then something we also have in common with Singapore is that we have very active sovereign wealth funds. Yeah. And what happens currently, especially in Abu Dhabi, is that they are building this AI data center, which is part of the Stargate, which will be the largest outside of the US.
Amazing.
With the top NVIDIA chips that have been negotiated, because the UAE has very good relation with the US, but also with China and with everyone, and that's the secret recipe. Now, if we start talking about investment strategy for the years to come, it's a different chapter, and I could speak 1 hour.
Talk to me about what's the difference in your mind. You're very humble, so I don't know if you'll answer this, but between a transformational CIO and a run-of-the-mill CIO. I'm putting you on the spot.
I don't know. I've been lucky enough in all my roles to have not really a blank page, but not too much legacy. Where I
that's a good point. So you got to write your own.
Absolutely.
Story.
So it's not really transformation, because it's not taking something that exists and changing it totally. It's more about building. So that's what I've done. The asset manager I started with was very small at the beginning. Now it's more than 1 trillion powerhouse, but it was very small, so you could write your own story. And then in Switzerland, I was hired to redo the investment process for equity portfolio management and strategy, pretty much. And then in Dubai, same. I was offered all leeway. So to your question, I think that there are some banks that need to show some continuity. And anyway, the CIO himself, you're only one person. You have a team, you have things that exist, you have a regulation. You don't change everything. For me, a transforming CIO is probably about when things are wrong. I mean, that's how it is. You have to start with a process, probably. But then if you're, I don't know, Pictet, whatever, probably you want to have a CIO that shows continuity, because you're there for a few generations of your clients.
Yeah, you have to have that stability across the board.
Yeah, but a few things are changing anyway, because it's all about, what always changes is market. It always do. You have things, we have models on the long term that work very well, but having said that, geopolitics change, macroeconomics change, valuations change every day, and you have to be sure that your process can be reshuffled. For example, I've put in place a classic strategic asset allocation and tactical asset allocation process. So strategic is mostly quantitative. You make sure that the portfolios will deliver, will protect capital and deliver the best expected returns. You're not supposed to change them very often. And tactical, you underweight and overweight because there are shorter-term inefficiencies. I'm here for 8 years. We have reshuffled the strategic allocation 3 times already because the world has changed 3 times for the long run, which is unheard of for me. And when I see that some Swiss bank will never touch it, I say myself, have you seen what happens with commodities, with the BRICS versus the OECD, where the level of government debt, it changes the picture. And post-COVID, we changed it, and we just reshuffled it again because of the AI build-up and the fact that shifting geopolitics means that commodities are more in favor for.
Do you find one of the biggest challenges is to really make a decision what you're going to talk about and report on, because you can go anywhere in the world and go in any different direction. So it's got to, that's got to be the biggest challenge of your job. Of what am I going to report on, focus on today?
No, you're spot on. And sometimes it's even an internal fight in your own brain, because the weird thing is that when you do investment decision, you're never 100% certain it doesn't exist. Or if it exists, it's probably illegal or there's something weird. So you always split. And the thing you have to fight against with yourself is the confirmation bias. Because frankly, with a bit of experience, and it's horrible to say that, but it's true, I can make a bullish case and a bearish case with very convincing arguments.
Either way.
I can probably do that. So the difficult thing is to have some integrity and sometimes to say, I don't know. And in this case, you're neutral.
But I wanted to bring you to that because I think the values of anyone in business, but certainly a CIO, the values of that integrity, coupled with genuine kindness and, been reporting the real news, it's not easy.
Well, thank you very much. You're too kind with me first, but I think it's natural. I mean, when you do a job, you do your job with passion. Your multiple jobs, I should say, with passion, because that's what we're here for. And even as I'm a believer in God. I think that God doesn't want me to take things lightly. And being kind is why not being? I mean, why are we here for this number of years? And but integrity is everything, of course, especially in investment management, in probably much broader, but in investment management, that's the only thing that gives you value. And in an AI-driven world, I mean, we're not far from the point where intelligence will become a commodity. So what is left? Judgment, trustability, accountability, maybe empathy, this kind of thing. That's
it's funny because, when I think about AI, it excites me, but it scares me.
Of course.
And then I was talking to my kids about this, and I said, that's why I think there will always be a place for things like sport, because it's real. And, like there have been movies made about like robots fighting and stuff, but it's not the same. And I still think that the emotional content that goes with investing is huge, because we listen to people, right? And it's like, if you sit down and you tell me, hey, Paul, you need to go with gold, and these are the reasons why. And you look at the last 10, 20 years, and of course you can read about it, but the thing is, you still need the human communication, in my humble opinion, to guide you.
I couldn't agree more, and for bad reason, because I don't want to be replaced by AI, but also for good reason, and especially, that's where I'm going to say, especially if the advice is wrong or doesn't work immediately. We've all had this experience with our AI assistants. Sometimes they tell you something, it's wrong, and you say, are you sure? And the AI will tell you, oh, fantastic, you're right, I'm sorry.
And you just changed it like that.
And you just change. If I tell you to buy gold, which is a good example, by the way, we are overweight on gold. And in 3 months or it's down, you don't want the machine to say, oh, yeah, you're right, Paul. It's down. You want somebody
there's no
tell you
consideration.
What to do.
There's no ramification saying you messed up. Do you know what I mean?
No, I agree. And it's accountability. And frankly, we live with our recommendation. You know what it is. It's the same for you. When in the other part of your very successful business, when you place a candidate, you live with the idea. I hope it's going to work, even if you have got your commission or whatever. It's done. You want it to be a success. I live with my recommendation night and day.
You have to. When you look at having a global consistency across multiple jurisdictions, how do you struggle with the challenge of? I'll give an example. In some banks, you'll have 3 CIOs with 3 different opinions. In some banks, they'll say no, you only have to have 1. I'm not asking you to make a call in it because each house is very different. But how do you thematically keep consistent across the board? Because you're the global CIO. It's not easy, surely.
Well, in our case, we only have one CIO office, so
Yes.
things are a bit easier. But I mean, it's good to be challenged first.
That's a good way of looking at it.
Frankly, and then you specialize in something. What I specialize in is wealth management. When I say that, it's not about the advisory content or the type of client, it's about the kind of investment process. So it means you don't chase super high return, you don't do short-term trading. It's about portfolio construction at a given horizon, and then you optimize tactically with some calls when there are inefficiencies, and with the selection trying to find the best products, basically. But when you specialize in something that is from 3 years to multi-generation, and you have the right portfolio construction and the setup to do tactical adjustment and products, it's not a problem if somebody comes and say, even in the same bank, oh, I'm bullish on silver for the next 2 weeks. It's not a problem, it works. And it's just not the kind of thing that you will necessarily put in this setup. It's like you do, a sports car and a bus are different things. And I'm more in the bus side, I must admit. But frankly, that's both have a steering wheel.
True. What are you most proud of in terms of your CIO office when you think about people, performance, culture? What really you look back and say, listen, this is what I've been really proud of building?
It's two things that combine. The first one, frankly, because that's why we're here for, is the performance track record. Really, and I know it doesn't sound very humble. I'm not humble with that. We have delivered superior risk-adjusted returns. We compare ourselves with everyone, and from Dubai. I'm very proud of that, especially, and it is the second thing, as I do that with a team that is fantastic, but that I didn't hire myself. We didn't reshuffle everything. There were people here. Some were doing tasks that had no sense and they were unhappy or whatever. And for me, I believe that we can do extraordinary things with very ordinary people, like myself, by the way. I don't see myself as anything else. And what I'm very proud is to have achieved really very superior risk-adjusted performance. We compare with any Swiss bank.
But how did you optimize the team? I'm curious. Because your point is because some great football coaches or cricket coaches or rugby coaches have taken the same team and optimized it, and they performed at a higher level. That to me is so profoundly important. So how did you guys do it?
I don't exactly know, but it all started with a process and with having people being specialized on a few things, and sometimes asking them to get rid of some things they were doing because it just doesn't fit with the process. I don't know, some people are doing technical analysis, and I said, no, we invest for the medium term. Please focus on that. And it started with a process, but of course, the thing, I was lucky because I'm a very passionate person. I'm not the greatest team leader, I think, in the world, especially for a large team, which I did in the past. I don't think it was my thing, but for a smaller team, it worked. It works very well, and things are a bit easy. In Dubai, it's a cultural aspect, something that I felt compared to France. There is a respect to the hierarchy. So I was hired to lead an existing team. They really gave me a chance. They were not like, oh, what is this new guy?
Which is wonderful.
And you can, and it's easy. You don't have to be brutal, to have the changes. You just go to people and say, okay, what do you think if you could do that? Yes, let's do it. And it was very very smooth at the end. But I'm lucky because I have outstanding
great
colleagues.
team.
Yeah.
When you look at private banking, what are some of the bottlenecks that you see in the business?
Well, that bottleneck is a good question. Wealth management is quite new to this country.
It's still new.
To be honest,
It's not 200 years old like
it's not 200
Lombard
years old,
Geneva.
and even in banks. There is lots of investment expertise, especially in the sovereign wealth funds, which are by the way
Tremendous.
outstanding. When it comes to the wealth management in banks, it's growing. You have outstanding family offices. Some very good multifamily offices. Banks are getting there, but we are still on a curve, especially when it comes to products.
Yeah.
And there is my bank would not be happy that I say that, but in general, there is this idea that banks and wealth managers, they like the short-term revenues a lot. And so sometimes
that's the dichotomy of our business, right? Because you're having to put runs on the board to look good today, but really you should be talking about the next 5, 10, 20 years.
Which is what we do. It is the countries like this, but sometimes if you couple the fact that banks and wealth managers they want to do their quarterly revenue growth, and the clients have a culture of trading, of short-term trading, because it's exciting. If you combine that, I think it's not really a bottleneck, but I think we still have some progress to do in this, where the Swiss are very good, I must say. Frankly, they are not good at everything, but they are good at that.
But Maurice, one of the things I always say to people is that one of the biggest dichotomies in our business is that the CEO in the job today is unlikely to be in the job 5 years from now. And it's not their fault, but they're up for re-election every year. Yeah. And I think it's very difficult to grow a business medium to long term if you're really worried about tomorrow.
That's very true.
And I think when you look at like Bezos, Jeff Bezos, he's always talking about, he's thinking about 5, 10 plus years down the line. But the reality is you have to stay commercial, right?
Yeah, that's right.
What are some of the myths that you see in our space of private banking?
Some of them, sorry.
The myths.
Oh, the myths.
The investment myths and...
I think it's broader than private banking, but this idea that you can successfully trade on the short term and make money consistently by kind of short-term speculation is a myth that I'm fighting every day, including in my bank, including with my own clients, because I'm not telling you that the banks are too greedy. I'm telling you that, I go back a bit on that. We launched the discretionary portfolio management, and to give you an example, it's not to talk about my bank in particular, but DPM is very nascent here. It's advisory, because also you have this trading culture.
Do you have a bespoke and standardized mandate?
Absolutely. We did that onshore now in the onshore.
What is the size for each one?
We're not supposed to disclose, but it's growing very nicely. But interestingly, we priced it in a very competitive way. What we take every year, the all-in fees are comparable or lower to the Swiss or whatever. And what I love with my bank is that when I told them, look, we're going after large clients. We don't want to take, we're not here to joke, we have to be competitive. And they said yes, despite the fact that it's much less profitable than advisory. And they said, yes, let's build this. So, but it's still going to take time. So this myth about trading, yes, we have some of our clients that love to trade very actively.
I find the newer clients, be it in Asia or in the Middle East, it's a lot of active advisory. Right, but as we know in Europe, the model is discretionary mandates. But if you look at banks like UBS, they've created a way, because I think the CEO has to incentivize the bankers to propose the DPM business. If they're not incentivized, it won't happen. I've placed quite a few heads of DPM, and one of the things I always say to them, if it's a new burgeoning business within the bank, is why don't you speak to the bankers and the market heads to find out which clients already have DPM accounts with the likes of UBS or Pictet, and go and speak to those clients that have already got those accounts, because you're not having to re-educate them,
That's so true. And you touch a crucial point, which is incentives. It's such a powerful lever. I mean, if you incentivize people just on their revenue on a monthly basis, of course, they will generate them. And then it's not about portfolio construction. If you do a mix between the assets under management, the revenues, of course, but also the client outcome in terms of risk-adjusted performance, then you can change the business, and that's what we do.
I don't want to bore you with this, but there's an interesting topic came up last night. I was having a dinner, and I was talking about Delta and Alpha, and like how, for example, a lot of bankers are measured on the net new assets coming in. So I gave an example. So say you have a 55-year-old banker that has got a book of 750 million, running at 100 basis points, 7.5 mil. And they've been running this for the last 3-4 years consistently. You can push them, say, I want another 150 mil new assets. But at what cost? Because either you try and squeeze more money out of the existing clients, you might burn the relationships, or you go and spend more time on business development. And I think there is a way of analyzing this, because I'm an ex-boxer, right? And there's an optimum, there's a balance. And I always think there's a point of diminishing return. And I've moved a lot of bankers purely for this reason, because they get to the point they just say, well, okay, I can get another 150 mil, but at what cost? And if I don't get it, is my bonus going to be hit negatively? And I find it very interesting, because I always say to people, the reality is there are sales targets, but how much of it is real? Or is it the global CEO been told by the board, you need to increase profits, and it cascades down? And I always think, you have to know yourself what are you comfortable doing? What is a healthy number? What is real? You know?
What is real? What is realistic as well? Because sometimes you have to be very honest.
Yeah.
But I don't know. Maybe it's because this country is so wise, or maybe it's because wealth management is quite new. But for me, typically, when I joined, my boss back in the days told me, "Okay, we'll write your KPIs."
Yeah.
And I looked at them and I said, "Oh, there are revenue KPIs. I'm a CIO. What matters is risk-adjusted performance and the quality of our outcomes. That's it."
Yeah.
And looked at me and said, "But everybody has revenue target."
Yeah.
I said, "Sorry, I can't. It's like a doctor in a clinic. The
Yeah.
clinic may have a revenue target. The doctor, you can't." And he said, "Okay." And you know, we are getting there. So I have zero revenue target. That's not my thing. Yeah.
But you know, the funny thing is, you know, I know a doctor who's got a terrible bedside manner, but he's an amazing doctor. And I said, you know, you're not getting any repeat business because the guy's going. So I said, you know, it's everything has to be measured a little bit differently.
Yeah.
You know, but why I find private banking fascinating is because really, if you think about the role of an investment advisor today, I think it's bigger than it was, you know, an investment counselor than it was 10, 15 years ago. It barely existed. And the role of a banker has become more compliance focused, right? So when you look at the landscape of private banking, do you see the investment product platform actually becoming more and more influential in the business versus the RM? Because traditionally it was the RM. Yeah. The RM was front and center of everything. Now the game has changed.
It's a very good point. I agree. Well, I would say that the first thing is about, well, as I see it for private banking, it's about the bank itself. You need to have a safe, because that's what we're talking about. You know, it's not here to make you rich. It's here to preserve and grow your wealth. So the first is the bank itself. Then I agree. The balance between the RM and the investment advisor, which didn't really exist not that long ago, is changing. There is the products themselves, but I think the investment strategy as well more and more, because it's a very different world. I mean, for example, you see the regional bias that people could have, where in Switzerland, just 15 years ago, many people had only Swiss stocks, even if they were, I don't know, from Japan, living in Italy or whatever. This is changing. The world is changing, and everybody understands that. Even the investment strategy, the portfolio construction, we've had, quantitative easing didn't exist 15 years ago, and that's the kind of things that you have to take into account. The world is changing at fast pace, it's accelerating, and even crazy. Strategy is important. Yeah.
I think what is new today is old tomorrow. That's the problem. You know, like going out on the boat today, I was telling my media producer, I said, you see that building there? Now, 5 years ago, that didn't exist. Oh, yeah. So the guy had an ocean view, but now another building has gone up in front of it. His return on investment may not be so good from then.
Sorry to cut you off. You mentioned something very right. When you say RM is about compliance, I would say it's particularly true, but it's not just about making sure that the client is compliant, it's also making sure that the advisor or the products, the operations are compliant with the client's need. And I think the RM is the depository of the trust, you know.
Yes.
My advisor will make you an advice. I will follow up to make sure that it's right for you, that it works, and when to take profits or whatever. Yeah. You know, that's sorry to I cut you off.
No. Yeah. But one of my interesting observations has been historically, when I came to private banking 20 years ago, the majority of CEOs were originally bankers that became market heads and became the head of a region and then the CEO. And now you're seeing that a lot of heads of investment product services making the switch across. And I feel that, you know, if you come from an investment background, you are a little bit more multi-dimensional, but also the concept of sales now is different, because before it was one-to-one. Now everything is broad-based, it's mass, it's scale, you know, and like we're here talking today, 15 years ago, 20 years ago, it didn't exist. You know, so like I run my own company now. I set up effectively a media company, right? And then you press record and you're live. But isn't that fascinating?
It is.
Isn't it crazy? So are there any projects or things that you're working on that you can share that are non-sensitive, and things that you're looking forward to?
Well, we are part of the entire UAE initiative to become an even bigger wealth management hub, and we are. I don't say that we're coming for you, Singapore or Switzerland, but in a way we are, because and we are part of this. Again, there is the domestic wealth, and it's still run largely offshore. And there is this inflow that we have, and it's our role now to be the best in the world, because that's what UAE and Dubai is about. You know, whatever they do, they want to be the number one. Emirates Airline being for all of us, it's where we look up.
It's your national carrier.
Yeah,
but isn't it interesting, because you grew up in France, I grew up in the UK, and I don't know if this was completely the same for you, but to say that you want to be the best, it was something that's frowned upon.
Absolutely.
But in my humble opinion, if you're not trying to be the best, what are you trying to do? You're competing against yourself, obviously. But if you're in business, it's you can compete against yourself, but you have to compete with the street.
Yeah, that's very true. And you're very right in saying that there is a nuance. It's not about necessarily being the best. It's about doing everything to be the best. Maybe we won't be, maybe we won't succeed, but it's the mindset. And for that, it's very refreshing. And you're in a country where people, I guess it's the same for Singapore, but they believe in the future, which is a big difference. And it breaks my heart to say that to my home country, where people are worried. If you ask the French people, will the next generation will be better off than the previous? 6% say yes. 6%. Yes. Here, it's 75%.
It's crazy. And I think we're part of a sandwich generation, because some of us will look at our parents have passed on, but it's everything. The game has changed. Mm-hmm. Everything has changed. Even now, when I think about my children and their children, universities might be obsolete.
Oh my God.
If you think about how crazy it is.
Absolutely crazy. Well, robots could be surgeons. It takes probably 12 years of studies and a big student loan to become a surgeon.
Yeah. But
at 12 years, robots could be there,
But talking about AI, I was telling some of the guys, a lot of the people, the young guys that work for me, they've only ever been on a date if it was facilitated through an app. And I said, but this is getting silly, because you go on to ChatGPT, how do I chat her up? And then the lady's receiving and say, he just asked me out, what should I say? So I said, you might as well just put the bloody phones together and then you go home. Do you know what I mean?
And then you go home and you restart.
Well, Maurice, I know you're a busy man today. I'm looking forward to seeing you speak next week. It's been a pleasure. And I have to say, when I set up the podcast, the first thing I did is I launched a CIO series, because I have to say the CIOs that I've had the pleasure of knowing and working with are the kindest people that I've met in the industry of private banking. And it's been a pleasure. Thank you so much.
It's my pleasure. And thank you very much for having me. You have a wonderful podcast. When I discovered it, I watched almost all the CIO series episodes and a lot of others in the sport. It's amazing. Yes. Thank you very much.
Thank you, Maurice. It's been a pleasure.
My pleasure, Paul.
Cheers.